And here with our trades is Malcolm Etheridge, CIC Wealth Management Executive Vice President and a CNBC contributor. Malcolm, welcome. Let's start with McDonald's. We just heard Kate talk about this one. The stock is up about 2% today. Your trade here on McDonald's.
Yeah, Tyler, with the number of new restaurants McDonald's has slated to open up this year, I heard the package there with them talking about going more value. But I think with the 2,000 or so new restaurants they expect to open this year, about 8,000 before the end of the decade, I think McDonald's is going to benefit more than anything from the additional franchise fees that are going to add to the top line revenue. So I think this one's setting up to be a buy for shareholders right now, buying this dip.
Okay, and I'm looking forward to some of those menu introductions. Anyway, let's move along to Walmart. B of A reiterating the shares at a buy, expected to report sales and profit gains when they report next week. But Malcolm, what a lead up for Walmart. Which way will they go? Which way will the stock go, do you think?
Yeah, I think it's going to be hard for them to beat and surprise without a holiday season as a tailwind, because those shares have, they've done well to start the year, but I expect them to be a casualty of the Fed's higher for longer stance on rates, right? When we talk about how stretched the consumer is, or from the last package, maybe is or isn't, as well as how high credit card balances continue to reach record highs day after day, I think that hits the average Walmart customer first. So I would consider that one a hold at best.
All right, finally, we asked you to pick your favorite consumer stock, and you said Amazon. Does that say something about how you feel about the strength of the consumer and his and her willingness to spend?
It says more about how much I love Amazon's diversified revenue stream, right? So of all the names connected to the consumer, Amazon's a way to play that trend, but mostly with the e-commerce brand being, for one, I like the e-commerce brand better than the others. But two, with them having the ability to stave off any potential recession with revenues coming in from AWS and now digital advertising through Prime Video, those margins are even better than the e-commerce side as well. I think Amazon just has the best ability to weather any potential storm going into the back half of this year, as we talk about rates staying higher for longer and maybe don't see cuts until next year.
I feel like Amazon's a cop-out last consumer pick. I feel like you don't want to pick any consumer names, Malcolm, which tells us something in and of itself.
Well, maybe I'm just an Amazon fan to that extent, but I really do love the fact that their e-commerce platform is as strong as it is, and they also have the ability to cut prices in a way no other retailers do, because they have those additional revenues coming from the other two profitable business lines. Walmart can't do that. So I just think Amazon's the better way still to play that consumer trend.
Rare is the week that something does not come to our house from Amazon.
Rare is the day over here.
So that speaks to its strength in the consumer area. Malcolm Etheridge, thank you very much.